Hello, good morning from sunny Saturday in Myanmar. My name is Manish Gupta, and I am again bringing you another live session to discuss what is uniform system of accounting for lodging industries and what are its current challenges, the key features, and whether to just give you a brief idea of what is usually. So before we start, I just would like to inform you that tomorrow morning we are going to have a masterclass as well to teach the usually key features and also how the hotel can comply with requirements in uniform system of accounting for lodging industries. So if you are interested, you can join the class. You can comment, you can take the links from the comments to register for this masterclass. Is going to be for about 3 hours tomorrow morning, and we will be covering all the aspects of uniform system of accounting. We also have a masterclass on becoming the hotel finance expert, which is available on our website ehotelmanagementschool.com. You can, if you are a finance expert or you want to become a hospitality finance expert, you can join that class to learn more about it. Okay, so before we start, I would like to ask you a couple of questions, just housekeeping questions. Where are you watching? And just comment where are you watching it from, and if you have any questions on uniform system of accounting for lodging industries. And if your hotel is complying with usually, what do you think? Are your hotel complies is in compliance with the usually uniform system of accounting, or have you read about the or have you learned about usually before in a formal setting? So just comment whenever from wherever you are watching it live, and also whether you have learned usually, and if your hotel has implemented uniform system of accounting. Before we go and explain what is uniform system of accounting and what are the current challenges given the pandemic times. So I just would like to see if there is any comment. Without any further delays, we will be starting very soon. So the uniform system of accounting for lodging industries, as we call it commonly, usually is a code, or is a standard code of accounting templates, accounting entries, definitions for managing the hotel's financial statements. So it is giving us a grand P&L, a general format of how a hotel's profit and loss statement should look like. So that's a general standard. So it will have what kind of lines it will have, what kind of statistics it need to have, how we are going to structure it, whether we are comparing with the last year and with the budget, and also the year to date. So it is giving us a standard, not only for grand P&L, but also what are the standard departments. For example, in usually there is a standard for rooms department, then there is a F&B department. In F&B department, we have outlet P&Ls, and then we have usually the other operating department. So there is a definition of who what we count as an other operating department. And then we have administrative and general, sales and marketing, information technology, and also the maintenance, and then we have utilities, and finally we have the grand profit, gross operating profit, and we have management accounting, and then we have other non operating income and expenses. So that's a general platform, just a general profit and loss statement. So there are specific design that is given. Apart from the profit and loss statement, uniform system of accounting also help with the management accounting in the form of providing the information, or asking the requiring the hotels to provide information in financial statements about the market segmentations. And what are those market segmentation? Now, every hotel may have different focus on the business. Somebody may be focusing on the uh, travel individual travelers. Some hotels are focusing on group travelers. Some hotels have a mix. Certain hotels are focused on more on the travel agencies and also the outsource OTAs. But certain hotels may be working with most of the corporates, right? So every hotel has different focus customer, but if we want to compare the performance of one hotel with another hotel, we will not be able to do that unless we know which market segment they are in. So if we just know only the revenue, we will not be able to understand where is the focus of the hotel. So in that case, we normally require the hotel to reconcile to inform what are the market segmentation. So whether they and then we can compare. So that information is given in the uniform system of accounting as a standard. And then you have statistics reports for more detailed analysis. So per cover analysis, average checks, ADR, occupancy statistics. So those are all statistics reports, which enables the analysis of profit and loss statement in much more details. So that process and that standards is already defined under uniform system of accounting for industries. So that's why the hotels does not require a very elaborate cost management accounting system, or because it's already given as a part of the financial statement. So this blend in, so you don't have to waste your time again on different things, right? So that's the benefit, or that's the purpose of uniform system of accounting. So it gives clear definition of various terms that we are using. For example, average daily rate. So how we are going to calculate average daily rate? So usually says that we have to calculate average daily rate by dividing room revenue by the only paid occupied room nights. So in the past, when this definition was not clear, we hotels used to calculate average daily rate. Some hotels based on the uh, total occupancy, whether it's paid or not paid, whether it's FOC, whether it's occupied by the staff, or whether it's occupied by a guest who is coming as a package and getting the room for free. So now there's a clear definition that is going to be only the paid occupied room nights, right? And the paid occupied room nights include the free room night. If let's say you are doing a promotion, buy two get one free, so that free is also considered as paid. So that's the definition. So it's a clear definition for every hotel to follow. Now it's a standard thing, so every hotel is following the same definition, and we are able to compare the daily average daily rates from one hotel to another hotel in an easier way. Similar RevPAR. Now the RevPAR is means revenue per available room, right? So revenue per available rooms is calculated by total room revenue divided by the available room nights. Now available room nights is a definition where many are there are many interpretation, right? So that's why usually it has given a very clear method of calculating what is available room nights. Many a times the rooms are taken by staff for living as a staff quarter. Sometimes it's taken by the GM. Sometimes is owner is staying by themselves. Sometimes a room is out of order for a month. So obviously the operations want to take it out from the available inventory. But there's a clear definition that if we close the room for less than 6 months and is not seasonal, we are not going to take it out, right? Unless we are doing a renovation, it's planned for more than 6 months, and then we will take it out from our available inventory. So these are the some small nitty gritty points which the hotel has to be aware when they are calculating or producing the statistics, so that they remain in compliance with the uniform system of accounting for lodging industries. Then we are gonna look at the occupancy percentage. Again, is the percentage of the um, oc- occupied room nights, not free room nights, divided by the available room nights. So available room nights, again, as we have discussed, is controversial. So we're gonna be looking at what are more challenges in the current scenario, even if usually has defined the available room nights. Then there are available rooms, as we have discussed. Classify the F&B revenue. For example, the as per uniform system of accounting, the non-alcoholic beverage revenue is considered as food revenue, while many hotels they consider any beverage as a beverage revenue. For example, coffee, tea, juices, they are considered as beverage revenue in many hotels, while uniform system of accounting requires them to be considered to be counted as food revenue rather than a beverage revenue. The purpose is again to avoid complications in calculating the cost. So if you take a look at your normal purchasing process, the juices and everything else is made through the fruits and vegetable, which are bought as a food cost rather than as a beverage cost, right? So if you put these kind of revenue in beverage, then the cost allocation process has to be there to make sure that the food cost is not high and beverage cost is not low. So that's the purpose. But if the hotel already has a process to segregate the beverage cost separately, then the hotel does not have to change, right? And then it's also providing the chart of accounts, a clear chart of accounts for revenue, for expenses, market segmentation, and labor cost, classification of the labor cost. Since every hotel again has different business model and have different cost, major cost, if they are having a profit and loss statement based on their own expense terms, is going to be difficult for comparing the hotel performance from one hotel to another hotel, and also look at the historical records if the accountants are being changed. So that's why there is a clear definition of each expense term and each revenue term, which is used in the profit and loss statement. So it's a no-brainer. Anybody, even if the new person comes in, they will be able to follow the same chart of accounts and follow the same standard of accounting to produce the similar financial statements. Yeah. There are usually differences in the interpretation of expense terms, which we will discuss tomorrow as a part of our masterclass, or you can join my masterclass on becoming a hotel expert. Uh, so that's where we are gonna discuss them in much more details. The next thing that we want to discuss is usually where we see in my experience that the requirements of usually is not comply, right? Is many are non-compliance. The first is I see is ways of allocating the package revenue. So many hotels, to make it easier, let's say there is a package which includes dinner. Now, by the standard, by the IFRS standard, and by the usually the allocation has to be in based on the standard price. So once we have to calculate the standard price of every component of the package, and then what is the total discount, and that discount is allocated proportionately to every item. So there's no fix allocation of dinner, right? That's usually. But to make it easier for the hotel accountants, hotels usually define the package rate. Say, okay, the dinner, if is included in the package, is going to be charged at, let's say, $10, right, per person. So that's usual allocation. Now that usual allocation does may not be inconsistent with the IFRS or even with uniform system of accounting. But the key is to see if it's a major revenue, then it's a problem. If it's not a major revenue, means you're not selling a lot of packages, then it may not be worth spending time on complying with the uniform system of accounting. So the hotel manager or controller has to take a conscious decision whether to follow or not, because in following there will be cost of implementation. The next big line of difference is in service charge. So many hotels, because in most of the countries, most of the regions, service charge is a traditional thing, and it's a norm to charge service charges. Sometimes it's even legal to charge service charge. there are laws, but in many countries there's no law, but there is a standard from the industry to charge a specified amount as a service charge from the customer, and customer has no choice whether they want to pay or whether they don't want to pay. Now, by the definition of usually, and also with the IFRS, the new International Financial Reporting Standards, and most of the gaps, if the service charge is compulsory for the guest to pay, it has to be recognized as an income in the profit and loss statement, and any payment, any distribution of the service charge is going to be recognized as a expense. But many hotels still recognize the service charge as a direct liability outside the profit and loss statements, which obviously affects the ADR, and also the total RevPAR and the profitability of the hotel. So that's the difference. And also it affects the management fee calculation. So if management fee is based on 3% of total revenue, then even though profit is not going to change, because at one hand you are recording revenue and other hand you are recording expenses, management fee is going to be changed, because if you record service charge as an income, you are supposed to calculate the management fee based on the total revenue, which means that the management fee you have to pay is higher. So that's one reason why the hotels does not recognize that under the profit and loss statement, but that's again a non-compliance. Then, as I have discussed already in the previous talk, that non-alcoholic beverages are considered as food revenue. So many hotels put it as a beverage revenue. Then there are no, sometimes the hotel buy equipments, for example, copy machine, for example, car. They take it on rent for a lease, long term lease, rather than just a ad hoc required. Now, usually requires that it's supposed to be recognized as non-operating income, non-operating expense, because the concept here is that the hotel has to be furnished with what is required to run the hotel by the owners, because usually is focusing more on the operators, the profit and loss statement from operators point of view, not from the owner's point of view only. So from owner's point of view is the same thing, whether we take it on a rent or we buy it directly, it's the same thing. But for operator, it has to be completed in a complete manner, right? So if the some equipments are taken on a long term lease, usually requires them to be recognized as non-operating expenses, the the practice is to recognize as it as a normal operating expense. It again affects the management fee. And there are other requirements that, if they say we have a contract which is going to be which is going to include the material and as well as the labor, that usually requires that we have to split the contract and recognize the labor part in the labor cost and material part in the other operating cost, just to get an idea of total FTE and also the total labor cost as a percentage to revenue. If you combine, we are not able to gauge that definition. So many hotels have different way of modeling, right? So some hotels may hire a permanent, for example, security. Some hotels may hire security on a permanent role. Some hotels may outsource it to third party along with the equipment. Some may give it only with the only on the labor equipments they provide. So whatever is the business model, if we don't follow the requirements, then the result of the labor cost as a percentage to revenue is going to be different. So that's the purpose, to remain consistent in calculating the labor cost as a percentage to revenue, whether whatever is your business model. Then the operating equipments, usually the operating equipment policy is not defined in uniform system of accounting. It's just say whenever if you purchase, it has to be charged to the expenses. But usually hotels have their own policies on operating equipment, whether they will consider this as an asset or whether they will recoup all the purchases from all the damages from the service charge, or whether they will recognize this as an inventory. So it depends on the hotel policy, but the idea here is it has to be inconsistent with inconsistency with the IFRS and with the gap. So that is the usual non-compliances that we have observed. If you have any other thing, you can join the class tomorrow, and then you will find out more. If your individual hotel is not following these standards, then what are the challenges now due to COVID, due to pandemic? There are some challenges coming up in the definition of usually, because usually has not been changed for quite some time, and the recent challenges are putting confusion in the accountants, how we are going to treat the rooms. So the first challenge or the first difference I would say is coming under the definition of available rooms. So the many hotel rooms are closed because sometimes there is a lockdown, so we are not able to operate the hotel. Sometimes it's because there is